Yo, what's going on, family? We're back again with another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. So I want to apologize for this glare. Like, the sun is in the one spot that can get into my apartment, and this glare is ridiculous, but we're gonna get through it. We're gonna get past it. It's not gonna affect the tax saving strategies that we're gonna drop in today's episode. So I'm excited. If you've been loving this channel, if you've been getting value from this channel, please like this video, subscribe to the channel, and go send it to somebody else, right? Don't keep all the tax saving strategies to yourself. Without further ado, let's get into today's episode. And the title for today's episode is How to Pay Yourself from Your S Corporation. If you've been tuned into the channel, you know that I did a previous video on how to upgrade your LLC to an S Corporation. So I figured it's best to follow that video now, teaching you how to pay yourself from your S Corporation. Because when you have an LLC, you pay yourself differently versus when you have an S Corporation. So it's very, very important that we understand the difference and we understand how to properly pay ourselves to save more taxes and to avoid a potential audit. Before I get into how to pay yourself, I'll give you all a high level overview of what we talked about in the previous video. You should go check it out, right? Go check it out. But I'll give you a quick overview. So what is an S Corporation? An S Corporation is a tax status. So you either an LLC tax as an S Corp or a C Corp tax as an S Corp. So an S Corp is not an actual entity, it's a tax election status. So that's what an S Corporation is. When do you want to make that S election? Now, you want to make that upgrade once your LLC has over $40,000 in net income. It is time for you to upgrade from an LLC to an S Corporation. And if you want to know why, check out the previous video. I'll go through an entire calculation showing you why $40,000 is the number. Now we know the what, the when, and the how. Now let's get into how to pay yourself from an S Corporation. When you have an S Corporation, the IRS requires you to pay yourself a reasonable salary from your S Corporation. Because remember, when you have an S Corp, the salary that you pay yourself, that gets hit with self-employment taxes. The rest of the money avoids self-employment taxes. So in theory, if you didn't pay yourself any salary, then you wouldn't have to pay any self-employment taxes. The IRS knows that. So they make it a mandatory requirement that the owner and the officers of S corporations have to pay themselves a minimum reasonable salary. So now I know the question is, Carter, what is deemed to be a reasonable salary? So I've done hours of studying. I've consulted with CPAs. I've taken courses in CPE credits, and all the research that I did, we came to a calculation that a reasonable salary minimum is 25 to 30% of your net income in your S corporation. So if you make $100,000 in net income, you need to pay yourself a minimum salary of $25,000. I like to keep it around 30%, so $30,000 just to be safe. The minimum requirement is 25% of your net income. How do we pay ourselves, right? Do we just do a transfer or do we have to run payroll? It is pivotal that you understand this. When you're an officer of an S corporation, you have to pay yourself using payroll. You cannot simply do an owner's draw. You cannot simply transfer money. You need to run payroll, and you need to run payroll using payroll software. And I'll give you all some recommendations momentarily. So now that we know we have to run payroll, how often do we have to run payroll, right? My recommendation is that you run payroll at least quarterly. Why quarterly? Because payroll reports are filed every quarter. So if you go a quarter without paying yourself, your state might assess what they think your payroll should be, and they might assess something a lot higher and charge you a lot more in payroll fees than necessary. My recommendation is that you want to pay yourself payroll at least quarterly. That way your payroll software will submit your payroll reports every quarter, and you won't have any issues with your quarterly filings with the state that you reside in. Now we know a few things. One, the S Corporation, we have to pay ourselves via payroll. Two, we know we have to pay ourselves a reasonable salary. And number three, we need to pay ourselves payroll at least quarterly, right? To make sure we file accurate quarterly payroll reports, right? That is the summary of how to pay yourself out of your S Corporation. And again, once you pay yourself a reasonable salary, if you need more money, you can simply do an owner's draw for the rest. So if you can't survive off 25 to 30% of the net income of your business, don't worry. You can just simply transfer the money from your business account to your personal account. Because remember, a S Corporation is a pass-through entity, okay? Which means that all the income in the S Corporation passes through to you personally anyway. So if you need extra money, you can simply transfer it out. Now, what are my favorite payroll softwares? Like, yo, this glare is ridiculous. But we're here. I'll just ease in a little bit. Number one payroll software is Gusto, right? Gusto is an amazing payroll software provider. It's really affordable. It's about $40 to $50 a month, and it's very simple to use. A lot of people get hung up or intimidated by running payroll because they don't know how to do it. It looks complicated, but Gusto makes it simple, makes it easy, and makes it very easy to operate and automatically schedule all your payroll out each quarter. Number two will be QuickBooks Payroll. Most of you all are already using QuickBooks for your bookkeeping, and they have a great payroll feature as well. So you can simply use QuickBooks Payroll to easily incorporate payroll into your business. My third recommendation would be ADP. ADP is usually for bigger businesses, right? Like if you're a single member S Corporation, ADP is not as cost effective as a lot of other payroll softwares. It's a little bit more complicated to use. If you want a third option, or if you have a lot of employees, ADP could be a great resource as well. That's it for today's video, y'all. Again, remember, at S Corporation, you have to pay yourself a reasonable salary, and you must do it using payroll. So please do not operate your S Corporation without running payroll. It's one of the easiest ways to get audited. Like if you have an S Corporation and you don't have an officer's compensation line item in your P&L report, you're gonna get audited. It's not a matter of if, it's a matter of when. So I can't stress that enough. If you have an S Corporation, it is mandatory that you run payroll in your business. So that's it for today's episode, guys. Again, if you enjoyed it, please like, subscribe, tell a friend about it. Get that S Corp operated ASAP and start paying yourself payroll properly. You'll save tens of thousands of dollars in self-employment taxes. Today was great outside of the glare, but we made it through, and I'll see you next time.